Kelvin Emmanuel, economist and chief executive officer of Diary Hills. Good morning, Kevin. Good to have you again on the morning show. It's always lovely to have you. How are you doing today?
Good. I'm very well, thank you, Steve. Good morning. Thank you so much for having me. It's always a privilege to be here.
Absolutely. Thank you very much. So let's roll right into it. It's about the two important government agencies, and 4 years after the signing into law by former President late Muhammadu Buhari of the Petroleum Industry Act in 2021. It's been 4 years after for both the Nigerian Upstream Petroleum Regulatory Commission and the Nigerian Midstream and Downstream Petroleum Regulatory Authority. Two important agencies, 4 years after. What are your thoughts? What is your assessment?
To be honest with you, I don't think NMDPRA has done well. If you look at the fact that currently the story that's making the headlines is that Dangote imported high sulfur petrol, and this is not true, because what actually happened was that a cargo of intermediate feedstock, which is called high catalytic sulfur gasoline and straight run naphtha. It's a standard industry practice for refineries all over the world. Malaysia, Singapore, China, India, the US, the UK, Saudi Arabia, UAE. It's a standard industry practice for refineries to import intermediate feedstock called HCSG, SRN, that is used to blend in their what they call residue fluid catalytic units. Catalytic cracking units, RFCC, where that basically freezes your molecules and then distills it into ultra-low sulfur petrol, ultra-low sulfur diesel. LPG is recovered as gas, And you see, what the PIA specifies in sections 29 to 52, which gives NMDPRA's mandates in the Petroleum Industry Act that was signed in August of 2021, is that in cases like this, for example, the regulator, if it had a lab, because this PIA specifies that the regulator is supposed to have a lab, if it had a lab, the regulator will test through what they call American Society of Testing and Material Standard gasoline testing methods for distillation levels, density, sulfur limits. The PIA specifies 50 parts per million for sulfur, to be sure that the claims that is making the headlines, that it's mostly propaganda against the Dangote Refinery, are actually not true, which is not true. And the regulator does not have a lab. Dangote imported a cargo of intermediate feedstock to process into further distillation, even lower than the sulfur limit specified in Nigeria. And that the test of that, the litmus test of that, is that he's actually exporting his products. 1 month ago, he exported petrol to the US for the first time in the history of Nigeria that had a sulfur level of 36 ppm. Nigeria's sulfur limit is 50, so the sulfur he exported is about 44 to 46% lower than what the PIA specifies, which is the highest quality grade, because that was what was requested by the off-takers in America. But if you look at NUPRC on the other hand, which is the upstream regulator, NMDPRA is the mid and downstream regulator, NUPRC is the upstream regulator. NUPRC has made rapid progress and improvements in terms of trying to get Nigeria back from where it was, from the brink, where Nigeria was producing less than 1 million barrels of crude in 2021. We're hovering at 850,000, 900,000 barrels. It expanded Nigeria's proven, probable, and possible reserves, what they call the 2P and the 3P reserves. And it's engaged consultants, TGS Ramform, to do seismic data of the entire offshore acreage, and has been able to, create more data for explorers to define where you have actual deposits, proven reserves in Nigeria, to ensure that the amount of dry wells that they drill is low, which was one of the reasons, for example, you've seen that Bonga North FID was commissioned for $5 billion, SNEPCO and its partners, and they didn't have to do any exploratory drilling before they commissioned it. They basically used 3D and 4D seismic data. You can also see that in line with sections 235 of the PIA on host communities development trust, there's been improvements. And you can see that there's an inverse correlation between the increase and compliance in HCDT and there's the development of hydrocarbon accounting framework for Nigeria. You know, I think that the government, it will serve the government better if all layers of government, the CBN, the presidency, the Ministry of Finance, Technical Service Department, they know and they have an accurate picture through empirical data, live on his screen, right, of what comes to surface at wellheads, okay? And you can see that there's been improvements because you see that with associated gas, for example, the amount of associated gas between the last 4 years has gone from about 4 billion scoff to about 7.5 has increased, and that is thanks to the fact that crude oil production has, for the first time in a while, hit OPEC quota. And the challenge Nigeria is now facing is not, is it reaching OPEC quota? The challenge it's facing now is how do we get OPEC to raise Nigeria's quota? How do we redefine the conversation and move to, should we create a situation where we convert our domestic crude intervention stock of 445,000 barrels per day, convert it into a strategic petroleum reserve where you delink the OPEC quota from the quota that is due to the refineries under the DCSO. I don't think NUPRC has done stellar in compelling producers upstream under domestic crude supply obligations, even if it has tried in trying to see that, you know, for NNPC trading, it caps the commission that NNPC trading collects per barrel of crude to 50 cents per barrel, compared to what the producers.
Now, Kevin, before we went off there, you were talking about the performance of the regulatory bodies, and you touched on the fact that you believe that the NUPRC has not done a stellar job so far. But I'd like to know what specific regulatory achievement or failure stand out to you in the 3 years since the PIA became law. Also looking at, you know, production levels, revenue generation, and of course, operational efficiency. How has the upstream sector performed under the new, you know, regulatory regime?
Oji, thank you. Comparison I was trying to make, you know, and I was trying to talk about the 2P and the 3P reserves. I was trying to talk about drill counts that has improved from 8, where we had it 4 years ago, to around 69 now, where you have it. Even if I think there's a room to improve that figure. The Commission is beginning to make strides and steps to, you know, enforce the drill or drop policy, which means that you can't have an OML or PML license and just keep it and not invest money. And I also understand that there are field development plans that are in double digits, and they are waiting for approval for them to start development drilling, you know. And I also think that in terms of revenue generation, and if you look at the recent tax act that says that the cost of collection for NUPRC, when it comes to royalty, that NUPRC collects is going to be fiscalized into the Nigerian Revenue Service. Even if, you know, I have disagreements with that on a technical basis, because I don't think the Nigerian Revenue Service has the technical ability to be able to calculate royalties based on volume, depth, and price. The way NUPRC has the capacity to do that. The royalties have improved, you know, so definitely the revenues that comes into the government based off of royalties has improved in intervening period. The challenge now is not the challenge we had 4 years ago when the PIA was signed for the upstream regulator. Like I was saying earlier, the challenge now is how do you convince OPEC to increase Nigeria's quota? And what direction is the government going to take? Because the government is at a crossroad. I've been saying this for a while now, that the government has a choice to make. And the choice it makes will determine the direction that the operators take, because the operators are looking to the forward guidance from the Nigerian government. Are you going to get, now that they can increase production, you know, you consistently have, over the last 30 months, they've hit OPEC quota, the technical allowance rates, will it be increased by the upstream regulator so that they can drill more barrels? that Nigeria desperately needs to be able to reduce its deficits in its budget. And deficits in the budget this year is about 14 trillion naira. The government can't finance the 54 trillion naira from revenue. Nigeria is currently operating 3 concurrent budgets. It doesn't have capital expenditure to operate its budget. So you need to increase your barrels and be able to provide more dollars for balance of payment. That the central bank needs to do balance of payment and also provide that money to the Consolidated Revenue Fund to finance. It's just because of the GDP rebasing that you had debt to GDP ratio go down from 52% to 39.1%. So you need more crude oil to surface. But like I was saying earlier, NUPRC has to work harder to, meet our wellheads and also to work on, Oji, the work of securing Nigeria's multi-product pipeline, especially the aggregation pipeline infrastructure that has come under threat, that has made NUPRC to develop alternative crude evacuation routes and has increased the unit cost production per barrel, is not the work of the Commission, it's the work of the security agencies. And I'm throwing this challenge, look, between NIMASA and the Nigerian Navy, they have 2 SCADAs, Falcon I and C4I, that is supposed to provide an overview, a SCADA overview of Nigeria's oil and gas infrastructure and help with securing it. So the challenge for the security agencies is not for NUPRC. And one of the reasons why Nigeria has one of the highest unit cost production per barrel in the world is because NUPRC has had to develop alternative crude evacuation routes through barges to take crude from wellheads because most of those aggregation pipes are under attack from non-state actors. So you can't blame NUPRC for that. But when you look at the mid and downstream regulator, the story is not the same. The MGID fund, you look at the fact that NMDPRA has not been able to tell Nigerians how much consumption of petrol it does on a daily basis, because that number of 50 million liters per day is not based on empirical evidence. Because if the levies you're generating post-PIA and the bridging allowances you generating pre-PIA is not in alignment with the total daily liter consumption of petrol on a daily basis, then there is a discrepancy somewhere. And from what we've seen so far, we've seen that anywhere around 47% of what they claim is consumed daily is actually not backed by data. NMDPRA, the mid and downstream regulator, is the same regulator who about 7-8 months ago went to Port Harcourt Refinery and Warri Refinery and claimed that the refineries were functional. Now, for a regulator to claim that and then counter-claim last year that Dangote Refinery was producing high sulfur petrol, which is completely false and not true, it shows you that NMDPRA has not done well since the transition from PPPRA, DPR, and Petroleum Equalization Fund into a consolidated agency for midstream and downstream regulation. You also need to ask NMDPRA what the pipeline infrastructure is for distribution to 22 retail storage distribution centers, RSDCs, that were set up by the Bureau of Public Enterprise under President Obasanjo in 2003 to 2007, how they are functioning, why those pipeline infrastructures are not working. So I don't think that they've done very well in terms of gas pricing. And if you look at DGDO, domestic gas delivery obligations, you look at gas pricing to the export market based on export parity, how have they regulated NGIC and NGML, which are subsidiaries of NNPC? Is NGML selling the gas that belongs to the Federation to the operators in the export market in line with export parity, or are they selling it at a discount to export parity? And if they are doing that, why is that? Is the work of the regulator to do that? In terms of modeling of gas prices, to see that gas prices align with export parity to the level where the operators upstream are incentivized to invest not just in trapping associated gas, but also drilling standalone non-associated gas wells to increase the amount of gas. We just came out of NESG, and one of the conversations we had was on how Nigeria can create a framework for non-associated gas and what frameworks and structures it needs to develop to be able to incentivize operators upstream to invest in standalone non-associated gas to increase the amount of gas that comes to surface, so that Nigeria will be able to do everything from LNG to pipe gas to increase the amount of electricity feed for its gencos to generate electricity in the domestic markets, increase for NLNG and all the other off-takers for LNG, for LPG, and the likes of them. So I don't think NMDPRA has performed as well as NUPRC has done, but there's still a lot of improvement, a room for improvement for the upstream regulator to do going forward.
All right, thank you so much, Kelvin. I got what she said with regards to OPEC increasing Nigeria's quota, but we all know what the issues are with regards to that. We need to basically show the barrels. We need to be able to maintain a steady average on what we can produce for at least 6 months, if at all that's going to happen. And we're still averaging between 1.4 and 1.2 to 1.4, which is still below what our quota is. Now, when I think about this, I also think about our investment and competitiveness as an industry within the oil and gas space. Do you think we're doing enough with regards to what NUPRC is doing, whether it's upstream, midstream, downstream as well, to stay competitive and attract new capital within the oil and gas landscape, and not just in the actual oil and gas, in energy infrastructure as well, which is something OPEC has greatly spoken about, which will greatly increase our capacity to produce. Do you think we're doing enough to attract these new investments to ourselves?
Kachi, very good question. I must say to you that in the last 3 months, the operators have actually reached OPEC quota of 1.5 million barrels per day. And the question is on how do you increase the technical allowance rates to be able to produce more barrels to surface? On the issue of competitiveness, look, it's a fact that what the oil and gas sector upstream was 10, 15 years ago is not what it is today. Because if you look at around Nigeria used to pride itself as one of the biggest producers of crudes, in Africa. Today, even if other producers have not met up with what Nigeria is doing, there's competition. Senegal is producing steadily 100,000 barrels per day. It just started its sector. It's improving. Uganda is coming on stream the end of 2026 because the 1,334-kilometer ECOP pipeline, because Uganda is landlocked, is going to be operational in the Q4 of 2026, and it's going to ramp up to 230,000 barrels soon, very quickly. Cameroon is producing, Niger Republic is doing 90,000, Chad is doing 110,000 barrels per day. Angola, as historically has been a competitor with Nigeria, is steadily at 1.2 million barrels per day. Namibia is coming up. Mozambique is there, Tanzania is working very hard. So there's competition. And then when you look at the Nigerian petroleum fiscal regime, and you look at the fiscal terms, I would say that the fiscal terms that Nigeria operates currently, it's not as competitive. And I actually think that there's need for remodeling of Nigeria's fiscal terms. I will also say that if you look at the macroeconomic environment and the cost of capital, one of the major issues that the independence has had is the cost of capital. You can see that Seplat has announced that they are going to invest $30 billion of fresh capital into exploration and production for the 583 wells that acquired from ExxonMobil. So when you look at the cost of capital, for example, for dollar loans, for example, you have the secured overnight financing rate, SOFR or LIBOR, at 6%. Then you have a country risk premium that lenders put to give loans to companies that operate in Nigeria of 3 to 4%. That's already 10%. That already places you at a strategic disadvantage to operators that function in other parts of the world because of the cost of capital. And when you look at the compute, what they call the pre and post internal rate of returns, what is the viability of it compared to what you have in other parts of the world? So these are the questions you have to ask, and this is one of the reasons why a lot of the independents have what they call the PXF loans that they collect to be able to do exploration and production upstream, and the cost of capital, it makes it difficult for them to achieve an alpha. When you look at their pre and post internal rate of returns for the macroeconomic environment impacts on them operating in Nigeria. So this is not the job of NUPRC. This is the job of the Central Bank of Nigeria. This is the job of the fiscal authorities, Ministry of Finance, to bring inflation down so that you can adjust your yield curve differential, your inflation to interest yield curve, and make cost of funds more attractive for operators to be able to raise finance and do exploration and production upstream. It's not the work of the upstream regulator.
All right, Kevin. Okay, let me come in here. If you can hear me, Kevin. Okay.
I can hear you, Steve.
All right, fantastic. Okay, thanks for the very detailed and, even if I say so, very fair assessment of what has been going on. But of course, you know that after the PIA was passed, part of the problems that industry stakeholders, identified at that point was the non-clarity of roles, ambiguities, regarding jurisdictions between the two important regulatory agencies. And I recall that one of the things, the clarity, even after PIA had been, passed, to clearly clarify, what the NUPRC should do and what they're expected to do as against what DPRA should do. Looking back 2 years after, or almost two and a half years after that new government has been in the saddle, even a new helmsman at the NMPC. Do you think that that clarity is still there and that, both parties are observing what ought to be their own calling, strictly speaking? And then secondly, if you don't mind, if you can take that with it, you mentioned the point about the fact that the regulators can't even provide for Nigerians our consumption rates at this point. If we cannot trust the regulators with that sort of a data, Dangote is producing, the marketers are importing, who do we turn to? Particularly the media and the public at large, who do we turn to know precisely the level of consumption, how many liters, millions of liters per day, per month, per year that Nigerians are consuming?
Steve, very, very interesting, important questions you asked. Thank you for asking these questions. First of all, I'll say that when it comes to operationalizing the Petroleum Industry Act, which is the guidebook and the rule book that the industry plays by and should operate by, NUPRC has done far, far better in terms of operationalizing the Petroleum Industry Act and actually turning that into results than NMDPRA has done. And the first question that you asked links into the second question, because if you pick sections 317, 7 to 11, for example, 7 to 8, that talks about the fact that, look, if a domestic refiner has shown capacity to be able to solve Nigeria's daily demand, based on Nigeria's actual daily consumption, that the regulator is supposed to do a review and reconsider import licenses it gives to companies to be able to bring in products into Nigeria. Nigerian Bureau of Statistics today, as we say today, cannot say that the data it collects from NMDPRA is based on empirical evidence. It doesn't have a framework for measuring actual daily consumption. What it uses, and I stand to be corrected, I'm quoting, I stand to be correct, can be quoted and corrected. What NMDPRA uses today is called projection. It doesn't have an empirical framework. What it uses is truck out. Truck out is not a reliable way to measure actual daily consumption, right? The PIA also says that the regulator, mid and downstream regulator, is supposed to have a standard lab that tests this for everything from flashpoint for AGO, diesel, gas oil, to density, to distillation level, to sulfur limits, to octane rating. NMDPRA does not have a lab. It subcontracts it to third-party vendors to do that test. And that places serious questions of integrity because it's based on quality, certificate of quality and certificate of quantity that the government plans. You see, daily consumption numbers are actually critical to planning of budgets. It's very, very critical for the government to know what the actual daily consumption is because it also will help the government to be able to market to investors, to say, okay, we want another company to come and compete with Dangote, for example. And this is what the market data says. Dangote is satisfying XYZ percentage of the market. We want another company to come and compete. And this is the market share, total market share, and then the available market share. It's based on that data. But if an investor comes and NMDPRA cannot show them on an empirical basis what Nigeria's actual daily consumption is, and then juxtapose that against what Dangote as the only commercial refiner is doing today, how do you convince the investor that there is a case, a use case or business case for investing in refinery like Dangote did? So these are the questions that we need to ask, and it's very sad. I think the issue about the non-performance of the mid and downstream regulator is down to leadership. Right. You know, I don't think the current leadership is right for it, and I think that the president, in looking at the two regulators, should consider, you know, maybe changing the leadership of NMDPRA.
All right. I mean, it's good that you have been able to juxtapose these two bodies and these agencies, and, you know, saying that the NUPRC is doing well. We know that it has implemented several significant reforms, including, of course, the approval of 79 field development plans, which I believe represents about $39 billion in potential investment, and of course the implementation of the Petroleum Industry Act that you have just discussed. But we have very limited time. I just want you to just answer this question real quickly. Given these regulatory reforms and operational improvements, what are the most critical economic indicators, and especially time frames, we should monitor to assess whether these reforms are, you know, successfully translating into sustained economic growth for Nigeria? And if you were in front of the president right now, what would you advise?
Audrey, you know, the most important metrics to mention, I already talked about it earlier. You know, if you see increased production, you will see it reflect in Nigeria's balance of trade, balance of payment. You see it reflect in the exchange rates. You know, there are three major indicators, indices: inflation, interest rates, and exchange rates. You see it reflect in inflation to interest yield curve. You see it reflect in the debt to GDP ratio. You see it reflect in the debt servicing to revenue, government revenue ratio, which is currently 66%, which means for every 1 naira the government generates 66 kobo of it goes into debt servicing. And you see it reflect in the deficit that the government currently has in its budget, and that will also guide how much loans that it collects from either multilateral development banks or it collects from the markets, you know. But if I were advising the president, you know, I will, you know, ask him to look at OPEC and ask himself the question, what is the use case for OPEC, considering that Nigeria is now transiting to becoming a net exporter of refined petroleum products. Nigeria is going from exporting raw crude oil to a net refiner of refined petroleum products. How do we go from here? What does OPEC serve? And if you're going to stay in OPEC, is there a case for delinking OPEC quota from what I call a daily strategic petroleum reserve stock that Saudi Arabia does, by the way, the US does, to serve the domestic refiners, so that Dangote doesn't have to spend $650 million every month importing crude oil into Nigeria from the net export proceeds that you would have brought to CBN for what the products that he exports outside Nigeria? This is the biggest question that the president has to answer right now.
All right, just to be clear, Kevin, if push comes to shove, part of what you were recommending is that a likely change, you know, rejig of the leadership of the two regulatory agencies can be part of the deal. Is that part of your recommendations?
I will keep Benga Komolafe. I would ask for the president to take NMDPRA leadership out. It's done very poorly since PIA was signed.
Kelvin Emmanuel, always good to have you on the program. Thank you so much for joining us on the morning show today. Thank you indeed.